In today's video, with the market at new all-time highs, I'll be getting into all of the major US indexes. I'll also be getting into a bunch of really great looking trade ideas and some really top companies. I'll be guiding you through all of the key market price levels. I'll also be getting into volatility and my best charts for when to get defensive with the market. If you picked up my video last month, the numbers speak for themselves with some huge performances across many of the technology names, in particular the likes of ARM, AMD, Dell, many more flying higher. So I really hope my charts helped you in some way. If you're new to the channel, I'm a verified and transparent Tier 1 professional analyst, former Deloitte hostage, so I'm sure you'll find a ton of value from today's video that you just won't find anywhere else. And as always, I hope the Scottish accent isn't too difficult for you. But let's start off with the S&P 500. We're now going out at new closing all-time highs. We've got a rising 20-day moving average. I think the big question everybody has is, are we going to have some kind of almighty pullback in the market? Now, it's worth saying that the fear and greed index isn't showing any extreme greed at the moment, so I'm not massively overly concerned. The S&P 500, when we zoom out onto the monthly time frame and we take a little peek under the surface at the new 6-month highs list, we can see that we're not also at extreme levels at the moment. So there might be some further runway for the S&P 500 in the near term. The upside targets that we've been working with, and I'll just say now, this isn't a 12-month target, this is probably a 2-3 year endeavour to get up to 1,000 level for the S&P 500 ETF SPY. So we're not overextended in my view at the moment. However, that doesn't mean that I'm not aware of when we could potentially start to look for some defensive positioning. The US dollar index is front and centre for me. If the US dollar starts breaking out of this big 12-month base that's been building, that's certainly one of the charts that would have me pausing my bullish thesis. The inverse correlation with the US dollar index and the S&P 500 is pretty clear, I think. As a simplified chart, if the US dollar index is going up, it stands to reason that the S&P 500 would be going down. But as I've touched on for the last 2 months on the channel, I'm not really seeing any major evidence of that for the time being, coupled where we're starting to see kind of rates pushing against key levels. So what rates do here is, again, key, I think, to the growthier areas of the market. So for the time being, I'm just treating each chart on its individual merits. However, if the US dollar index breaks out, if we see the 30-year note, the 10-year note start to break out of these bases again, that would have me standing back and observing. But for the time being, we've got the triple Qs again going out at new closing monthly all-time highs. We've got the Dow Jones Industrial Average also looking like it's going to be going out at new closing monthly all-time highs. We've already got the Russell 2000. Again, the riskiest stocks have been ripping higher. There's been an unbelievable amount of alpha to be generated so far this year. Hopefully you've done very well from the riskiest stocks. It's not just the small caps. We're seeing the same thing with the micro caps. The volatility index, again, if there's one chart that I would urge you to maybe consider replicating, it would be the volatility index. For me, we're still sub 20. We're not really in that kind of complacency zone where I would start to kind of look at things from a contrarian perspective. I think for the time being, I think it makes a lot of sense to just kind of look for the best stocks in the best sectors. That doesn't mean that I'm going to go, buying AMD or, any of the overextended, Dell is another big one over the last couple of months. it means that maybe start to kind of look for opportunity in some of the beaten up areas. And lo and behold, I have some of those beaten up areas to present to you this month. Now, I'm not expecting anybody to fully understand this chart. This is what's called a relative rotation graph. Now, just to explain what this chart is, the center point of this chart is benchmarked against the S&P 500. We have 4 quadrants. We have a weakening quadrant, we have a lagging quadrant, we have an improving quadrant, and we have a leading quadrant. As we can see, technology and semiconductors are already, they've been leading for the last few months. But I just want to bring onto everybody's radar the potential here for software names. Now, software names, if you're not aware, have been beaten to death. A lot of them are now starting to rebound in a meaningful way. We are currently in the improving quadrant, so the big question I have going into June is whether or not we're going to start to kind of see some kind of outperformance that's sustained from some of the software names. We already know semiconductors, when we look at the ETF, we've had an almighty 200% move off the April 2025 lows. I hope everybody has been smart enough to buy up a lot of the semiconductor names. For me, the message that I have with my clients this weekend is we have now met our next upside targets for semiconductors. I think it's pretty reasonable to start to kind of expect a little bit of digestion of gains, perhaps a little bit of profit taking up here. Nothing goes up forever, folks. I think we all understand that. And like I said, I think potentially there's a catch up to be had for software. And I do have a bunch of software names again to present to you over the next 20 minutes or so. But if you are still here, it tells me that you're getting a ton of value from my work. So please do consider subscribing, notifications, and following on social media, on Twitter, StockTwits, etc. But I did get a lot of positive feedback from my analysis last month, so please do let me know in the comments what stocks you would like to be covered next month. I am now starting to kind of take chart requests, picking out some of the best charts to cover next month. And again, I have picked out and I am responding to quite a few of you from last month as well. So just let me know in the comments what names should be on my radar for you. But let's just kick it off with ServiceNow. Now, I think Jensen Huang, probably says it better than I can. It's the foundation of AI enterprise software. And it's had an almighty rip off the recent lows now. Now for me, I am viewing this particular chart through the lens of it will slowly start to kind of make its way back to previous all-time highs. It's actually one of our current high conviction ideas for the second part of the year. So the hope for us is that ServiceNow will start to kind of take out these pivot levels and start to kind of put in these breakouts. I think a lot of you breakout traders are obviously looking for. For me, I do prefer buy low, sell high, and ServiceNow was the particular stock picked out from the IGV bottom thesis that I've been working with. So ServiceNow for me is a no-brainer for the second part of the year. So I think it's certainly worth adding to your watch list as well. Also, Leopold is knocking it out of the park. So I want to kind of get into quite a few of his recent charts. I think if you're not familiar with Nebius, I think Nebius, $58 billion market cap, quite a reasonable valuation, but there is a monster short interest on this, 16.8%. And Leopold has taken a 5.6% stake in Nebius, so he obviously sees the potential in this as well. Again, this has been a long-term chart of ours. and we think it's potentially gearing up for a breakout at some point in June, so certainly worth adding to your watch lists. The next one I want to add in is IREN Limited. Again, another one of Leopold's charts. Big monster base that's been developing over the last 9 months. As I zoom in here, I think if it kind of takes out that level at some point, $71, $72, then I think there's a pretty solid runway to $100 as an absolute minimum. Again, reasonable valuations for a growth company, and market cap still only 23 billion as well. TeraWulf, again, probably another one that's in the same kind of sector. Again, very, very straightforward, folks. I'm not overcomplicating my charts. Big 6 month base. It's broken out. And the chart, the targets that we're working with there for TeraWulf are up around $44. But again, I would like to kind of just see it break out of this recent 4-week consolidation, just to kind of give me added confidence that it is going to take that next leg higher, and obviously, you know, put in some solid numbers. Amazon, again, it's another one of those no-brainer buy low, sell high charts when they present themselves, but it is breaking out to new all-time highs. And again, the targets that we're working with there for Amazon are up around 340, 350. Again, we'll need to see how, you know, the earnings reaction is in a few weeks as well. But I'm very, very happy with the earnings that they posted a few weeks ago, and let's see how far Amazon ultimately wants to go. Nokia Corporation, again, I'm not expecting everybody to understand what's going on with Nokia at the moment. I think if you're from a certain generation, you'll think of the old phones, but Nokia have expanded their business, and I would just urge you to do your own due diligence there, and what they do now. Again, $75 billion market cap, but one of the things that's caught my attention with Nokia is there's a lot of insider buying. So I think we're looking at CFOs, CEOs buying up lots of shares recently as well. So that's obviously a good positive signal. So I do wonder if they know something that we don't, as they generally do. So again, I think as long as we're above $14 here for Nokia, I don't have any issues whatsoever with the chart. I think if we do start to kind of break below these $14 levels, then maybe there's something, you know, bigger amiss, and, you know, perhaps we're kind of seeing the sector pull in a little bit, offering opportunity. But I think at the moment, as long as we're above $14, I think it's had one pullback in the last 10 weeks. Certainly not bearish, but let's see how things develop there with Nokia over the coming weeks. Another one of the software names that we've picked out recently for our clients is Nutanix. Again, just posted really positive earnings during the week there. I actually had a position, but I sold it before earnings because the implied move was quite high. There wasn't enough profit in order to hold through earnings. But Nutanix, again, a lot of our clients are holding this one, and I think if it takes out that level around 53, there might be some kind of technical trade set up there for you. So, you know, worth adding, as I said. Microsoft, since it put in the tradable bottom a few months ago, it's been consolidating, probably quite frustrating, I think, for a lot of investors over the last 6 to 8 weeks. But again, this week it looks like it's putting in that confirmed breakout along with a lot of the software names, and we're starting to see some big rebounds there. So if you are looking at mega cap tech names at the moment for some kind of potential catch up, and you're not really looking at the likes of Nvidia going out at new all-time highs, then potentially Microsoft might be one that you prefer. Now, I did say that I would cover Dell. I've had a lot of messages across social media because I have been covering Dell on the channel for the last couple of months, and I think, you know, I don't think when I started presenting the chart, I didn't expect the kind of move that it's had. If anybody's out there and they've acted on Dell because of my analysis over the last 2 months, congratulations. I didn't see it getting the Trump pump, but here we are. It's posted earnings. Earnings, I think it was up 30-40%. Yeah, the RSI, there's obviously heavy volume on it, but let me just have a look at the... Yeah, so the RSI on the daily chart is up at 89, so I think it's probably reasonable to expect some kind of pullback next week at some point. But ultimately, if you are holding Dell, it's been a monster, and I suspect any kind of pullback here will offer further opportunity to get into something. If you just look at what the likes of Intel has done, Micron over the last 6 to 12 months, you get the idea of what Dell is potentially capable of. But like I said, I think it probably needs the broader market to play ball a little bit. Now, the first name from the comments from last month that I wanted to cover is Novo Nordisk, and it's one of the charts that I kind of go back to every now and again. I obviously, with massive declines, I always look at these types of stocks as opportunities. We're in the mega cap space, $250 billion market cap, but I think there's a potential there for a swing style trade. If you're a long-term investor, granted, completely different game. But I think the chart, it probably lends itself to a 30% swing. It was actually a swing late last year. It worked out very, very well before, of course, earnings just decided to crater the stock. So again, I think there's the potential there for whoever asked for it last month. Potentially, if it can take out that 47.48 level, then that might trigger some kind of momentum. Nvidia, that I mentioned a few moments ago, again, semiconductors in general, I think for me personally, are not massively appealing for new positions, just purely on account of a 200% rally off the lows 12 months ago. I'm much more interested in some of the other areas like software, as I've alluded to. But if you are tempted by Nvidia, it's testing all-time highs, could potentially break out. It has massively underperformed the sector. I think that's something to be aware of with Nvidia. Again, if you picked up the analysis last month, I was actually saying that for me, I'm actually more focused on finding the next Nvidia. We're looking at a $5 trillion company here. There's not really, in my view, kind of a lot of alpha to be had. I'd probably see Nvidia being treated the same way Apple does. So I think a lot of my clients are actually more focused on finding the next up and comers and the mid caps space. So if you are interested in Nvidia, again, potentially there it could do something at all-time highs. But again, as I was touching on, I'm looking for the next big up-and-comers. Credo technology, I think, is one of those, $40 billion market cap. There's a 5% decent little short interest. So breaking out of a 6-month base. But let's see what happens here over the course of July. I think it's definitely worth doing a little bit of due diligence there. Oracle, again, another request from the comments last month. It's actually a chart that I've put out the bat signal to our clients a few weeks ago on this, and it looks like it's breaking out again. So software, like I've touched on already, it looks like it's probably bottomed now. It's really just about finding the individual stocks now within software that are not going to kind of crater, and Oracle's probably as safe as any of them, but there's obviously a heavy exposure there, I believe, to OpenAI. So again, we'll need to see how things go with that one. ARM, I think ARM, massive congratulations. It's been very, very good to me personally over the last few months. Very, very happy with it. I've been working with targets here up around 364. Again, talking about the semiconductor space, potentially due some kind of pullback. I probably expect that at some point over the next week or two. But for the time being, I would just absolutely view any pullback in ARM as some kind of buyable dip opportunity. And it would be the same message with AMD as well. Again, if you follow the channel a while, you'll know that I've been banging the drum on AMD, saying it's going to be the next $1 trillion market cap. So when it was back at 200 billion, I think Micron Technology beat it to the punch. But AMD, I think, very, very strong breakout over the last couple of months. And I would view any kind of pullback in AMD as an absolute gift. Another chart request from last month was Boeing, and Boeing's not one that I'm massively interested in. It's more one that I think the money managers I work with, they're more concerned with names like this. But the more I look at it, that's a 5-year potential base double bottom that's developing there. If it could take out that kind of 270 level, then that might make some sense. But it does look like it's potentially tightening up a little bit. So I can see why the chart is appealing. But for me, from a technical perspective, obviously fundamentals, completely different game. But from a technical perspective, it would need to take out those February and December highs, and then that would be a valid technical breakout. Cisco Systems, again, monster move over the course of the last few weeks. I covered this one on the channel a couple of months ago. I didn't expect the kind of move that it's had. But again, we're a little bit further down the cap scale, $460 billion market cap. But the targets that we're working with there are up around 127. And if we get through that, then obviously 200 potentially comes into play. Another name that I'm looking at closely personally is SoFi Technologies. Again, it's probably a play on rates. I think if you are in the camp that rates are going to start to come down a little bit, then maybe you are looking at some of the growthier finance names. I think SoFi, for me, is potentially setting up. It looks like it's starting to kind of base, potentially, if you like your chart patterns, double bottom chart pattern. But if it can take out that $20 level, then I suspect that's one of those names that's going to just get a lot of momentum very, very quickly. So again, I think SoFi is worth adding to your watch lists. Also with T1 Energy, it's currently one of our high conviction ideas. Just watching it over the last couple of weeks, it's just kind of pulled in, the last couple of days, it's just pulled in a little bit. Looks like it's potentially just retesting this breakout level. Again, if chart patterns are your thing, potentially bull flagging. But we're working with previous all-time highs as our next upside target there. Iridium Communications, again, very, very happy with this one. I've been covering this one on the channel for the last 5-6 months. It just keeps going from strength to strength. Further down the cap scale, $5 billion market cap, reasonable valuation, and decent little short interest as well. So it is breaking out again. The upside targets that we're working with there, and that we have been working with since the start of the year, as a best case scenario, is around $67, $68. Let's see how far it wants to go. Going back into the AI space, I think Cipher mining, I think very, very similar to IREN. That's a big 9-month base that's been developing there for Cipher mining. So I think if Cipher can take out that $25 level, it's obviously further down the market cap scale, but I don't mind that at all. There's still a massive short interest, up around 13%. So absolutely, I think it is worth adding to your watch lists. Not sure vegan restaurants are going to be everybody's cup of tea, but that's a 9-month base that's been developing there for Sweetgreen. Again, monster short interest there, around 19%. There's a little bit of hype with this one around social media. I believe Chris Camillo is hyping it up a little bit. So again, it might be something to do a little bit of due diligence on if you're looking for vegan restaurant exposure. And we've also got AppLovin, longer term favourite of the channel. Started actually covering this one way back at $60 a couple of years ago. It's just gone from strength to strength, and that looks like it's put in a big massive monster breakout this week. Again, like a lot of software names, and the target that we're working with there is up around $725. But if you're still here and you're wondering who it is I am and what it is I do, there's a link in the description for our website at honeystocks.com. If you'd like daily access to a professional tier 1 analyst with a top track record, I'd encourage you to check out all of our transparent, time-stamped work on our website. If you are a trader, an investor, a money manager or a financial advisor, my work is likely a good fit for you. We provide memberships to all of our premium work, which includes our complete market breakdown and trade ideas that go out every single weekend, all of our highest conviction investment ideas. I'll show you what that looks like in just a little second. Our bite-sized midweek halftime report updates and a few more trade ideas. You'll also have access to a wonderful, intelligent community of professionals, investors and traders from all across the world. You have complete access to all of our chart books, which includes all of our trade ideas, ETFs and commodities. And if you're new to technical analysis, you also have access to our complete technical analysis program, which will show you how to read the stock market and also build a process that's unique to you so that you can stand on your own 2 feet. Now, to show you what our time-stamped highest conviction ideas look like, here's a few of our very, very recent ideas that have gone out to our clients and members over the last few months. As you can see, the charts are very clear, very, very easy to understand, have very simple instructions on how you can approach our best ideas. But I am very, very unique in what I do. I publish on our website the performance of every single one of our highest conviction best ideas that has gone out to our clients since 2018. So if you are considering accessing our work, please do make sure the types of ideas that I generate are the types of ideas that you like to buy. It's always high quality stocks with very solid fundamentals, and there is a risk to reward proposition as well. I think generally my work is a good fit if you have a mid-term approach, if you're looking, a few weeks to a few months out. I think if you're someone who keeps getting shaken out by market news, making impulsive decisions at market tops, market bottoms, etc. If you keep getting confused by all the different market analyst opinions, if you're maybe too busy with work, life, business, etc. to find the best stocks and the best charts, then maybe my work is a good fit if you do want to be part of a community and you're sick of hunting around social media. So if you have stuck here to the end, as always, thank you very much for watching, and I hope to welcome you soon. Thanks very much.